Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital, as well as the Portfolio Manager of Fundstrat Capital's Large Cap ETF Granny Shots, ticker GRNY. This is our update as of the week of December 22nd. Just some information for you. The NAV of Granny is $20.28, and total assets are $652 million. The past week has been a tough week for markets. The Granny Shots was down 2.72%. The S&P 500 was down 2%, which means Grannies underperformed the S&P 500 by 75 basis points. Now, the reason for this is the markets went risk off last week, and that's because the FOMC December rate decision surprised investors, causing some consternation because of the number of cuts expected for 2025. So I thought I would spend a minute talking about this and how it affects our Granny strategies. What investors focused on was that for 2025, the Fed is expected to make 2 fewer cuts in 2025. So roughly 2 cuts instead of 4. But for the long term, the Fed is still expecting to make 6 cuts, bringing long-term rates or the Fed funds rate down to 3%. I think it's helpful to see this visually. Current Fed funds are 4.5%. And in September, they were projecting that by the year end 2025, Fed funds would be 3.4% and then 2.9% longer term. But with this December rate meeting, they now see the end of 2025 Fed funds reaching 3.9%. And that's actually 2 fewer cuts. So instead of 4 cuts expected next year, it's 2 cuts. And that's what caused some alarm for markets. However, let's think about really what happened to the long-term forecast. And for long-term Fed funds, they're still projecting 6 cuts and getting to a Fed funds sort of neutral rate of around 2.5% to 3%. That means their projections really about the path of future rate cuts is the same. It's still 6 cuts. And what you have to ask yourself is what matters for equities? Is it the 2025 forecast or is it the long-term forecast? And the answer is pretty straightforward. What matters is really the long term, because that's really the basis of stocks anyways. It's discounted cash flows, and the Fed is still dovish. And I thought we could walk through the existing themes right now and see if any of these are affected by the fact that there's 2 fewer cuts. For instance, the millennial strategy, which is focused on things that millennials care about. That's not affected by the fact that the Fed's making 2 fewer cuts. The shortage of global labor and the rise of AI automation is not affected by the fact that the Fed's making 2 fewer cuts, nor is energy or cybersecurity, nor the fact that the Fed is easing financial conditions. In fact, keep in mind the Fed is still dovish. And when we think about our tactical themes, style tilt's not going to be changing, nor seasonality or the PMI recovery. So bottom line, it wasn't really a fun week, but it doesn't change anything that we'd want to own. Since inception, Granny Shots is up 1.42%. The S&P is essentially flat, or it's 0. And that means Granny Shots is outperforming by 118 basis points. And this past week, you can see S&P and Granny Shots relative performances here. But notice the column that's with an arrow. There's only 5 stocks that went up this past week. So it's a rough week. And these are the 5 best performers, but also the only 5 stocks that actually rose last week in the Granny Shots portfolio. And the bottom performers just did a lot worse. At the bottom of this is Ingersoll Rand, AMD, CBRE, Meta, Leidos Holdings. Obviously a rough week. There are no major events coming up. And just for those who are not familiar why we call it Granny Shots, it's named after a way of shooting free throws, underhanded, like Rick Barry. This unconventional style has a 90% success rate, much better than shooting overhand. And these are the 7 themes, which I talked about earlier. We only want to buy stocks that appear in more than one theme. So we look at these themes, and the stocks with the most overlap become Granny Shots. And as you can see here, the top grannies are names like Meta, Google, Garmin, Grainger, Caterpillar, etc. There is a lot more information on the fact sheet, and you can find this also at grannyshots.com. And this is the investment team. It's myself, Tireless Ken, who's a portfolio manager, and Steve Quinn, who's the head of asset management. That's it for now. Thank you for listening, and I'll speak to you soon.